The big announcement was one that we knew was coming. It had been trailed extensively in the press. So the corporation tax rate is going up. It's going up from 19% to 25%, and that will take effect from April 2023. So we've got a bit of time before it kicks in. We have a reintroduction of a regime that we thought we'd seen the back of in 2014. So there'll be a small companies regime which will apply to companies with profits of up to £50,000, and they will continue to pay the old 19% rate. The full rate doesn't kick in until companies are earning more than £250,000, and there's a taper between the £50,000 and £250,000 limit. On top of that, we've got something that wasn't trailed in the press, the super deduction. So the super deduction is there for companies spending money on plant and machinery. Companies, this is a corporate-only release, so it doesn't apply to partnerships or any other unincorporated businesses. But for companies, if they spend money on plant and machinery, they'll be able to deduct 130% of their costs, giving them extra tax relief. That's only for the next couple of years and only up to the point that the higher rate of corporation tax comes in. So it's for expenditure between the 1st of April 2021 and the 31st of March 2023. It's effectively a 25% subsidy for the cost of the asset. So helpful, but it'd be a shame if it wasn't extended past the 2023 deadline. Finally, on the business tax side, for companies and for unincorporated businesses, we've got enhanced loss carryback rules. So if businesses have been making losses either in the current tax year 2020-2021 or the tax year coming 21-2022, instead of being able to carry those losses back just 1 year, those losses can go back 3 years. So that's a helpful way of generating some additional cash flow right now when it might be needed. You might look at this cynically as it's a way that the Chancellor is encouraging you to use your losses before the higher rate of corporation tax comes in, when those losses would be more valuable. Well, the Coronavirus Job Retention Scheme, to give it its full name, the scheme that never ends, has been extended again, and we're told this is the final extension, and this time that may even be true. It was due to end in April 2021. It's now been extended for 5 months to September 2021 on a similar basis to how it is now. So it will be 80% of wages paid for hours not worked up to a cap of £2,500 a month. Still no contribution towards employers' NI or employers' pension costs. But there is a phasing out, as we had before when the scheme was last due to end. So the phasing out this time from July, there'll be a 10% contribution by the employer. And from August, or in August and September, the final 2 months of the scheme, there'll be a 20% contribution from the employer. So good, that's going to overlap into the period when hopefully we'll be a bit closer to normality resuming. We heard, often it follows an announcement in relation to the furlough scheme, but we heard in the same breath that we've got an extension to the self-employed income support scheme. So we've got 2 more grants, the 4th grant and the 5th and final grant. Some good news that this now applies based on the 2019-20 tax returns. So that's brought an extra 600,000 people into eligibility. The 4th grant will be 80% of average profits capped at 7,500, so similar terms to what we've seen before. And the 5th grant is slightly different. We've got the 5th grant covering May to September, so a longer period. And your entitlement to the 5th grant will depend on how you've done during the coronavirus period. If your turnover has dropped by greater than 30%, you'll be entitled to the full grant. If your turnover is dropped by less than 30%, then the cap is reduced from £7,500 to £2,850. So trying to direct the support to those who've suffered the most during the coronavirus period. Well, we were approaching a cliff edge at the 31st of March this year, just in a few weeks' time, where the stamp duty land tax exemption on the first £500,000 paid for a property was due to end. So that saves purchasers £15,000 of stamp duty land tax. A great rush to get property transactions completed before the deadline, but we'd already known, a lot of this was trailed already, that the Chancellor was thinking of extending that after quite a lot of lobbying. So we now have an extension of the 0% bracket for the first £500,000 up to the 30th of June 2021, so we've got a 3-month extension. And then to avoid a similar cliff edge and all the same lobbying that's just happened, we now have a phasing out of the 0%. So for a further 3 months, for July, August and September, The 0% threshold will be at £250,000. So we've got a halving of the benefit of this. And then from October onwards, it reverts back to the normal 0% bracket of £125,000. So that's all good news. We also have, not a tax point, but worth mentioning at the same time as stamp duty land tax, we've got the mortgage guarantee scheme from April 2021. This again was trailed before the budget. As long as you've got a 5% deposit and you're buying a property worth less than £600,000, the government will guarantee most of the mortgage, and the banks will be more inclined to lend. This is available to all, so it's not limited to first-time buyers, but it's not available for second homes and buy-to-let properties. So will be a popular scheme, and will keep the liquidity in the housing market that's been generated from the SDLT exemption. Well, we all looked into our crystal ball ahead of budget day, as we do, and tried to predict what he's going to say. The big fear following the Office of Tax Simplification's report was that capital gains tax was going to go up. No mention of capital gains tax really at all in the budget speech or any of the documents, so no increase in capital gains tax today, which is a relief for many. Also, no mention of entrepreneurs relief. It had already been massively scaled back in recent budgets, but no further erosion of the benefit of entrepreneurs relief, although that's still fair game if there's a revisitation of capital gains tax in future. Also, no mention of the pensions tax relief regime other than the freezing of the lifetime allowance for a few years. So the tax relief on contributions and the ability to draw out 25% tax-free still remains for the time being. We do have, coming down the track on the 23rd of March, we've got Tax Day, and Tax Day will be the launch of a number of consultations which will give us a bit more of an indication of what's going on in the future.